The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, good afternoon, and we're starting to see a little bit of a sell-off in the market, believe it or not. Hard to believe. This is the big anniversary date, folks, September 3rd, 1929. The New York Stock Exchange topped at 383. Over the next 3 years, into July 8th, 1932, the market went down to a price of 42. It gave back 92% of its value. 16 of the Dow stocks went bankrupt. During that time, the Depression, American Telephone went bankrupt twice, as I recall. There were over 2,000 automobile companies in the United States in 1929 from coast to coast. There was also the three of the greatest inventions of our current lifetime, electricity, the telephone, and the automobile. Now, also, you can throw in airplanes there, too, but those were the three main ones that were going on. It wasn't for 30 years. It wasn't until 1959 that the Dow Jones finally went above the level of the that it made in 1929. It took 30 years to do that. One other tidbit of information, that if you would have bought a house in Beverly Hills, which was one of the best places to buy a house in 1929, it took 32 years for that house to get back to even. But that is neither here nor there. Okay, we got our first caller from Boston, Massachusetts. I think that's where it's located. Had a daughter who went to school there. Steve, are you there?
Yes, I am, Larry.
How are you? What can I do for you?
Well, I'm good. Well, over the last couple months, I've been cycling into gold and silver stocks, and I've actually got most of my portfolio in them. I still have a bit of a cushion. I had about a 10% cushion. It got diminished by about half yesterday, and I was concerned about whether the 1240 support level in gold or that 1258 level was going to hold. Because obviously if it doesn't, I think we could perhaps go and make new lows, which would be painful to stay in the stocks. So
absolutely. Do you ever follow the XAU, the gold silver index?
Actually, I've been watching the TSE Global Gold Stock Index, and I have a wave count on that, and it hadn't completed a fifth wave down. But neither did the S&P going into the March 2008 lows. So 2009 lows. So I was thinking perhaps the gold stocks had bottomed because I expect a pretty big reversal from that low. But perhaps there's going to be one more flush down. So that's my concern.
Well, it looks to me, I've posted into Tiger TV, Steve, the gold and silver index, and if we go below 96, we're trading at 98.84 right now, but if we go below 96, I would think that there's something wrong. Frankly, if you go below 97, I think something's wrong, or if you see gold trade below 1250.
Are you talking the XAU?
The XAU, because the price that we're looking at on gold for this downswing of this AB CD leg that started in March comes in at 1212. Now that's only $50, away from where it is right now. But the problem is not just with gold. If you take a look at silver, we could easily see 1760 in silver, and if it goes below 1760, it could go to 14 without any trouble at all. So I was very bullish gold just in early May when we had a pretty good run up, and then we gave most of it back in a matter of 3 days, which was a little bit scary. And then after that, it started to give it back, and so it's hard to be bullish when the market starts to roll over. But I really think that gold has got farther to go to the downside. That's what it looks like. It's got to hold right here around this 1260 level.
Yeah, and you're saying the XAU needs to hold at 97.
At 97, yeah. That's what I would say. That's the 382 retracement off of the May low, and as long as it can do that, I think it has a pretty good chance. The negative part of it is during this last up run, we had 3 lower highs, than we did last August. One came in at the 61% retracement, and then the one we had in July came in at the 786 retracement of the one in March. So that told us that the trend was still, heading down, and that's what's happening right now. So, that could easily go down to 88 from where it's trading now, which is 98.
Yeah, that I wouldn't want to stay in my positions. I'd have too much pain.
Yeah, stay away from the pain. I'm a big believer of staying away from the pain. That's for sure.
So that's kind of using the aggregate value of my portfolio as my stop. That if it went below my entry prices, then I should cash everything out.
Well, Steve, you're in a good position because you still have a little bit of a cushion.
A little bit, yeah.
Yeah, and one of the most important adages in the market, in my opinion, is that it's much better to be out of a market wishing you were in than in a market wishing you were out.
Yeah.
So, you can easily get back in if you want to, if things change, but, if it starts to go lower, you just don't want to suffer the pain. It's just not worth it because you can get back in these markets, just in a heartbeat, and the commission cost is so small now that it's really, really no problem at all.
No, I had 1240 as my stop, Larry. You're saying I should reconsider that and make it 1250?
Yeah, I would say 1250 because the ABCD swing measures to 1212, and below 1212 is 1170, and below 1170 is 940. And believe me, when gold starts to accelerate to the downside, as you well know, it can accelerate quickly. And believe me, we've been in a bear market since, April of 3 years ago when we hit the 1932 per ounce level. All the highs have been lower all along, so we're still in that bear market, and maybe we have, one more big washout down to that 900 level. I don't know. That's, a long way from where we are now, but these markets they're very, very jumpy. We haven't seen anything yet in the stocks yet, because once they start shaking that tree over there's going to be, things will happen in other markets too, just because of liquidity and margin calls and stuff like that. So it could be very, very interesting, like we had in 2008.
I know that Basil was looking for a low in gold around December, from hearing him talk, based on his H patterns. I was going on the basis of a report I got from a Swiss trading group, and they sent me a chart of the TSE index with what potentially was a truncated fifth wave, but they said they would be wrong if 1240 didn't hold. And they also sent out a quarterly chart, which was very interesting, going back to 1933. And the RSI on the quarterly chart had been buried and had turned up at the December lows. So that was that kind of motivated me to go in. And the other thing that motivated me to go in was they had a momentum indicator to indicate fourth wave lows, and that momentum indicator had gone below the zero line and had come up, and this is on the quarterly chart, back up to the zero line, and they said the minimum requirements for a fourth wave low had been met. So they were projecting a move all the way back up to the 2012 highs off of this low, which is why I went into the positions, because I thought, wow, that's like a double in most of these gold stocks. So,
I try not to get involved when you start thinking of doubling and tripling.
Yeah,
because I'm really a singles hitter. I'm try to be like Pete Rose, except he gambles and I don't. But if you can get on first base, at least you got a chance. You're already on first base, Steve, so all you have to do is protect yourself, and if the market does turn from here, you're in pretty good shape. But if it doesn't, you can get out with your skin intact and look for another place to enter. That's what I would do.
Mm-hmm.
Well, so you're in a good place if you protect your backside. That's the main thing.
Yeah, I don't want to lose any of my original capital. So yesterday was kind of a big shake-up for me because I saw enough money to buy a new car disappear in one day. So.
Oh yeah, there's an old an old wives' tale about that car that I've told myself many times. If you want to buy a car, just go out and buy it, because if you want to buy a car with profits in the market, what happens is you keep thinking about those profits in that car, and it screws up your thinking about what to do next and do the right thing. So if you buy the car and keep on trading, you'll be just fine. Yeah, me too. Excuse me.
Yeah.
Go ahead.
Yeah, any time I see that happen, that says, uh-oh, you better pay attention.
The only problem I have is it's hard to find someone that can work on a 1976 Toyota. That's the problem. Anyway,
I have a 2002 TL that's never had a problem, so I'm just going to drive it until it has a problem, and hopefully that'll be 3 or 4 more years.
That's good. Well, listen, thanks for calling in, and if you go past the Charles River today, wave over at Harvard.
I will. I'm likely to do that. All right, Larry, thanks.
I don't know if you know this or not, but I went to Harvard.
I didn't.
No, I went there to visit. I didn't go to school there. I just went there to visit.
Okay.
Listen, my daughter went there. Listen, good luck to you, Stephen, and thanks for calling in.
All right, Larry. Have a good day.
Okay.
Yeah, bye-bye.
Bye-bye. We were talking to Stephen in Boston. One other thing before we take the break here, I got a phone call real early this morning from Europe. A lady was absolutely screaming and livid at me because a week or so ago we were talking about the double potential top in Apple at that 100.70 level, and I suggested either to sell the stock with a $4 risk or to buy the puts, to buy the October puts. And this lady was really livid. She said, the stock closed at 103 and I'm going to get killed and the market's going crazy. And it woke me up because it was real early in the morning and I didn't realize what was going on in Europe. And she was screaming at me. And I said, well, ma'am, you got to stop in there. Well, I'm in the options. I said, well, the options they're not going to move like the stocks. I said, just be patient. It's no big deal. And then the stock, is now lower on the day. Of course, she doesn't call me back then, but she did wake me up to tell me that, what a bozo I was. And I did sell it too early. I bought the puts too, but, I didn't buy many. But, I think that's a possible double top in Apple. I'm looking at some major tops here on some of this stuff, which I have been for quite some time. We made the exact 1.27 expansion on the S&P cash. We hit that exact right after the opening, and today is a really, really critical day, the September 3rd date, cycle-wise. So we'll be back after the break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, and I posted into Tiger TV the chart for Apple that it was making. The double top was basically because the stock had split 7 for 1. And it topped at 703 about 2 years ago, and then it went down to 385. Now it's back to that $700 level. So whether this is going to be the double top or not, I don't know, but it's backed off a little bit. I mean, that's really not very much between 103 and 99. That's 3% in a stock. I mean, that moves around quite a bit. So this is basically a non-event. The next chart that I posted into Tiger TV is the long-term weekly chart of the Dow Jones Industrial Average. And as you can see, we are, and we've shown this many times before, we're completing this monster broadening pattern, which is also a 3-drive pattern. And we're in this zone, which started around 16,800, I believe, and we'll see, how it finally ends up. We've not made new highs in the Dow Jones index itself this week as of yet. We came pretty close today, but we did not. We came the same thing with the futures, and it was really surprising because as most of you might be aware that we had a lot of strength early in the morning, around 3 o'clock, 2:30, 3 o'clock New York time in the morning, when there was supposed to be peace between Russia and the Ukraine. And anybody believe that I still have 2 shares of the Brooklyn Bridge waiting for them to buy, but I don't think they'll do anything like that in the anyway. That's my opinion. Of course, my opinion doesn't really count very much. We're also making we have not made a higher high yet than July 3rd on the New York Stock Exchange Index. It's also making a double top, and as I mentioned before, the S&P Cash 500 Index has reached the exact 1.27 on the gap up this morning, and has since turned down. So this is a key day. It's been brought to my attention by a couple of folks in the Tiger TV den who are quite well read and follow a lot of different things, that Martin Armstrong from Martin Economics was calling for the high today in the stock market on September 3rd. I don't believe it has anything to do with the anniversary date of 1929, but it's just a coincidence that it happens to be, that type of a date. Whether that's going to be the case or not, I don't know, but at least the market early this morning has started to move to the downside somewhat. Not a great deal yet, but at least it's showing signs of less strength than before, especially the NASDAQ, because you would think that it being the strongest would have continued on with its strength, but since this morning it has given a great deal of that strength back. Now, the next one I would like to bring up here that we've had some folks talk about earlier today, Basil, and I believe one of his guests came on, was the Russell Small Cap. And we did make the 61% retracement last Friday, but the strength that we had late last week and again yesterday and then early today took us back above the 61% retracement, and we're trading right at that 61% retracement right now at the 116.87 level in the Russell. But that's a very small index, folks, and I don't trade it. I just look at it as an index because it does have some nice patterns along with it, but we'll see if it's going to be anything. The transportations has made a slightly higher high than we did on July 3rd. We had that big up day yesterday, of course. That was the leader of the market. That was up over 100 points in the transportations, and today we made a higher high than yesterday, and we also took out the high of July 3rd, so that's important that that's happened, but it has to keep going in order to to really be significant. The utility index, all it's been able to do is to make a retracement back of the highs that we made earlier in the year. So there's a little bit of divergence in the Dow theory, but not a great deal when you look at it, overall. The big market that we've been really talking about for quite a bit of time here recently has been the excuse me if I can just find it here. Doggone it! No, give me a break. Oh, it's tough when you're Italian. You can't walk and chew gum at the same time. Oh dear. I'll bring it up in just a little bit. I wanted to show you the bond market because it is really come under a great deal of pressure here these last few days. We've had one of our biggest down moves in bonds and notes, which came right at that ABCD 61% retracement. Okay, we got the stocks. Dow still up a bit, and NASDAQ is down.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted into Tiger TV the Dow Jones Transportations Index. As you can see, it has a potential in for a double top. After being higher, it's actually lower on the day now. I've also posted into the Tiger TV room the chart of the Dow Jones Utilities. And if you're a member of a CMT or taking your CMT test, you ought to really look at this chart because it is a perfect head and shoulders pattern. The right shoulder and left shoulders are equal in distance. They're almost equal in time. So in fact, they're perfectly equal in time, and it's really an amazing chart. It's got a great deal of symmetry. As long as we don't get above 567 in the Dow Jones Utilities, it looks like we could be headed to the downside. We had a big reversal yesterday in the utilities from that 565 level, and then we went down to the 61% retracement of last week's low and turned around, just like we have in all the indices recently. So the trend is still up, but once those start to break, if they ever do, that will tell us that the market is getting ready to go down. This is just a really critical day today, and it has nothing to do with the September 3rd date, the anniversary date, 1929. By the way, if you really want to read a great book, it's called Only Yesterday. I believe the author's name is Allen. I'm not sure, but it's got all the history of 29. The what did they call that? It was not the golden years. I'll think of it in a second. But it was really incredible, the story behind it with all of the automobile companies that were there and the price of real estate and just everything. It was just really amazing. But remember, that was the early part of our country. It was the formative years, so things are a lot different this time. But we have not had a situation where we've gone through a depression. We had that big recession of 2009, but frankly, I think we're getting ready for something that is going to be really, it's called the Roaring '20s. That's what it was. Thank you very much. Someone reminded me. But it's interesting to see the times different. I listened to the radio yesterday, and I see that Kevin Durant, the great basketball player from Oklahoma, got a $300 million contract for shoes over a 20-year period with Nike. Can you believe that, folks? $300 million. And he also has a $50 million retirement kicker that goes into it. And that's for selling shoes. Basketball shoes. This is such a deal. So this will be my last day at TFNN. I'm going to go in to be a professional basketball player. I've got to do a little bit on the workout basis and work on some of my shooting skills. But it looks like, he did it with Under Armour. Is that who it was with? I didn't know. I just heard it. I heard the figure, and I just literally, couldn't believe it. It was really, totally blew me away. But I know the basketball coaches at the college level make a great deal of money. They make several $1 million a year. Our coach here at the University of Arizona makes $2.5 million. And so, there's big money there, so that's where you have to go. Like Willie Sutton said, he robs banks because that's where the money is. If they're willing to pay him, he should accept it. That's the way I look at it. Fortunately, the only way that I get my bonuses if I happen to make a winning trade here and there, and that's what I try to do some of the time. Once in a while they come in, other times they don't. We'll have to wait and see down the road. But boy, this is a really key day today. I'll tell you a funny story. I told my wife that I was going to retire from TFNN if the New York Stock Exchange Index closed into new high ground. And she said, "Why would you do that?" And I said, "Well, I would be totally 100% wrong." And she said, "Well, you've been wrong for 6 months. Why would another few days mean anything?" I said, "Yeah, you're probably right, because I enjoy doing the show, so I decided not to do it. What I'm going to do is I'm going to make a bet with Tom O'Brien that I'll ride on his boat if the New York Stock Exchange Index closes into new high ground anytime after today. So we'll see what happens. I'll work on a life preserver and see. It's a fate not worse than death, but very, very close to it. But we'll see. Anyway, I won't go into that. But anyway, it's very interesting. Let's get to the bond market, folks. We've been talking about the bond market for a great deal of time. For the past several weeks here, we've had a big change in the bond market. We've had one of our biggest breaks down after we made the big ABCD pattern that I'll post into Tiger TV here in just a second. And you'll see that we've had a huge break that's taken us down to the 61% retracement of the low we made in late July. So this is going to be a real interesting place here to see if the bonds are going to stop. Let me, just give me 1 second to get this chart hooked up here. I'm working off my laptop. There we go. And so today's low was a 61% retracement of the low we made on July 28th. And of course, this is what we're seeing, a pretty big move down. Now you'll see a gap on this chart, and the reason for that is they switched from the September to the December contract, and actually they'll make the change here in the next day or so. eSignal will, but that is data. There's not really a gap there. It's just really hard down moves, 3 days in a row, stopping right at the 61% retracement. In fact, it went a little bit below it, but not by much. So that's the key level that we're hanging on right now with the bonds. The notes look even worse. I posted that chart into Tiger TV just a little bit ago, right after the break. And as you can see, the notes are even worse. They couldn't even make new highs. I mean, when the bonds were making new highs up at the 1.618, all the notes could do was make a 61% retracement of the previous week's highs. So there was a big divergence there. And the note market, folks, is at least 6 times bigger than the bond market. The bond market is really big, but the notes are huge. They're far, far bigger than any of the stock indices, many, many times over. So this is real money that's moving in some of these markets. So you've got to respect the fact that we've seen this market, at least tell us that, hey, look, there's something getting ready to happen here because rates have started to spike up when the rest of the world doesn't think that can happen. Now, I posted the chart for the dollar index as the first chart into Tiger TV today, and as you can see, that should be completing a 1.618 expansion of that CD leg up here at the 83 level. 83.10, I believe, was the level we were looking for. But the thing that's interesting about that dollar index chart is the fact that the number of days between highs are Fibonacci days. The first one was 144 days between high and high, and this one now is 55 days between high and high. So here we're coming into the key level for the dollar at the same time. Martin Armstrong is forecasting for a high in the stock market, and he has a very, very strong track record in stocks, and he does a lot of work. Much of his work is metaphysical. I mean, he really looks at the numbers of the Fibonacci summation sequence. He looks at some of the astro things that occur, but he's a very, very smart fellow. Whether this is going to be a top or not, I don't know. All I know is since August 14th, we have been straight up with virtually no correction. So when we do get a correction, if we do get one, it will be something of a nature that will probably surprise a few people. So we'll see if in fact we do get a correction from this level. But it's still relatively early in the day. We've had a pretty good rally back here since I've been on the air. The market's rallied back well over 50 Dow points, so it still has a chance to turn and make even new highs on the day, and I can get ready to take that boat ride with Mr. O'Brien. But we'll have to wait and see if that's going to be the case. The euro, I want to spend just a tiny bit of time here with the euro. I want to put up an hourly chart to show you the critical level that we were reaching in the euro over the past several weeks. We finally completed a bearish butterfly pattern down at the 1.618 level at 131 even. Whether this is going to be the bottom or not, we don't know, but at least it's had its first sign that the 1.618 level stopped. Remember, our long-term target on the euro comes in around, I believe, 120 to 117, as I recall. That's been the big one that we've been waiting for a very, very long time. The 786 of this move down comes in at 130, and we've been basically straight down since early May, other than the little tiny 2-week rally that we had in early June that stopped at the 382 level. So we are very, very oversold. We're due for a little bit of a bounce here. Being down this many weeks in a row, 13 weeks, makes it an outlier event, so we are scheduled to get a bounce. Now, usually there's a relationship between the dollar and interest rates, because if interest rates are going higher here in the United States, people will be buying dollars so that they can buy bonds and notes to get the higher interest rate. But anymore, the way things are going in these days, you don't necessarily know that because of the possibility of the flight to quality and, something like that. So that's what you've got to be watching when you're, doing these things. You've got to look at each one separately, because looking at one by itself does not really do it anymore. You've got to look at each pattern as its own specific pattern, because that's what's moving the market, and that is in fact where you want to be putting your dollars at risk, is where that pattern is completed. That's the good part of being in pattern recognition, is because you don't have to worry about what the fundamentals are or anything like that. If there's more buying, prices are going up. If there's more selling, prices are going down. That's basically, the bottom line, what we're watching when we are looking at these things. So keep that in mind. That's the real key, is to see, where we really are. Now, I've had a question about the grain markets. I don't want to spend a great deal of time today on that because of the fact that we have our commodity show tomorrow, but the grains are getting absolutely hammered again, which we've been expecting because there's just virtually no hope from a technical side that I can see, or a fundamental side that Rich Anderson can see, because there's just no place to store the grain that's going to be being harvested. They don't have enough in the bins, enough bin space to store the corn, so they're going to have to get rid of it. And the only way you get rid of it is at reduced prices. So that's what it looks like. And the technical picture is certainly telling us that these things want to go lower. We'll cover that tomorrow. But we had a really big rally in wheat, and then it gave a perfect buy signal, a perfect sell signal up there about 60 cents or just a few days ago, and it's dropped over 60 cents a bushel, to the downside. So we'll see if that continues. The commodities that I follow, folks, the copper, gold, silver, corn, wheat, soybeans, those all look like they want to go substantially lower to me. Whether that's going to be the case or not remains to be seen, but that's what the charts look like. Particularly silver has got, it looks to me like silver wants to go to about $17.50 per ounce, looking at the weekly chart. But again, we'll cover that tomorrow. We want to stick more with the stocks because this is such a key day in the stock market. We want to be able to tell ourselves that if this is the case, we have to watch September 3rd. I think it'd be rather ironic that we would top on September the 3rd, 2014, just in case something crazy would happen. History books would say, wow, it happened to be the same day as September the 3rd of 1929. So it's very, very interesting, what we have in here. I do believe very, very strongly that what's coming is going to be worse than what I thought was good coming on March the 9th of 2009. And as you remember, I was very, very bullish then. We had a 3-drive to a bottom pattern. We were setting exactly at the 61% retracement of the 1982 low, and that was the best buying opportunity for a very, very long time, was on that weekend over the March the 5th, and the market, has continued to go high, went a lot higher than I thought it was going to go. I thought it would be the biggest short covering rally in history, which has certainly been the case, but I didn't know we would go into new high ground until after 2011, when we had that short-term correction, the ABCD correction in 2011. And then started up from there. But this has been a big bull market, and it's going to be really interesting to see. There'll be some records broken. There's been a record broken on the upside. We'll see some records broken on the downside. The biggest down move we ever had in stocks, I believe, was 777 points. And the biggest update we ever had was a few weeks after that. Before we made our bottom, we had a rally of over 800 points. That's when the market was hanging every breath on what Congress and the Senate were going to do with the TARP program. Bail me out, baby. Okay, stocks are rallying a little bit. We'll be right back after the break.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, folks, I'm going to end the show by going over the New York Stock Exchange Index things that I think are important. Number one, which we've already shown, is that VIX index did not go into new low ground during this last 1.27 expansion. In the S&P, we had a 1.618 expansion in the NASDAQ. The Dow Jones was made a double top. The New York Stock Exchange Index, which is the broadest of all the indices, it's cap weighted, and it's really the way to look at the stock market. Unfortunately, our financial press has trained us to look at other things like the S&P, the NASDAQ, and the Dow, particularly the Dow, which is only 30 stocks, which really is not a very good way of looking at the market. However, this is what we have to deal with. The New York Stock Exchange Index has not made a new high from July 3rd. This also tells me that the Bradley model still has a chance to turn down from this level. So this is such a key level that we have today that it's going to be very interesting to see what happens, with September. Historically, September is the worst trading month of the year. Over the past 88 years, I believe it has by far the biggest negative return of, I think it's a minus 0.6% return for the month of September. Remember, we were up 4% in August, which in itself was an outlier event, because if you had every month being up 4%, you'd be up 50% in 1 year in stocks, and that almost never happens. It does from lower levels, but not from high levels. But those are the things that we're really keeping an eye on here. And if we do go into new high ground in the New York Stock Exchange Index, especially after today, I will say that we are probably going to go a great deal higher. And I'll have to put my application into McDonald's one more time. The problem is I'm running up against that 75 years of age hiring limit that they have here in Tucson, so it's going to be either a roll of the dice whether I can get the job there or not. But we still haven't sent the application in because we haven't made that new high yet. So this is going to be real critical, where we are coming into this market for the rest of the week. And we also looked at the transportation. It appears also as possibly made a double top, and then we have the head and shoulders pattern in the Dow Jones Utilities. All those tell me that we should be very, very cautious from the long side from this level, because it has got a lot of technical things that are screaming, be very, very careful. And be afraid, be very afraid. I think it was the commercial that they used to have, on all the time. So we'll watch these things. On tomorrow's show for the Commodity Hour, I'm hoping to have Rich Anderson on the air. He's traveling. I think he's going to be back in the office by tomorrow, and we want to talk to him about the grains because they're just getting hammered again. After we had a very minor 5 or 6 day rally that took beans up about 30 cents, and we had the corn rally about 10 cents, and of course wheat had a big rally and then has given up most of that back. So there's just a great deal of selling coming into the grain markets that we'll talk about tomorrow. So the commodity markets are still under a great deal of pressure. It's not like the stock market. Everything is in Camelot in stocks, not so in the commodity market. So it's going to be an interesting bifurcation, as Basil Chapman says sometimes on his show. Watch this VIX index, folks. It hasn't let us down very often. It's a very good timing indicator. It's trying to show us that the market is trying to turn down here. Live every day in an attitude of gratitude, and may God bless.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
You're watching Tiger TV.